Thank you to the attendees who have joined in. We are going to start the session in less than a minute now. Due to some technical issues, I'm going to have to wait for a bit longer before we start the event. Thank you so much for your patience. Okay, if some people are saying that there is some issue with the voice, if you can hear me properly now, just let me know. I think there was some issue with the mic, but I have corrected it now. So just give me a confirmation that you can hear me clearly in the comments, please. All right. We'll wait for that comment. In the meanwhile, I will continue because some people are able to hear clearly. All right. So like I was saying, I use the 75-minute chart as the primary decision maker. However, in order for a trade to qualify on the 75-minute chart, it also needs to qualify on the daily time frame and the 15-minute time frame, which is basically one time frame above and one time frame below the primary decision making time frame, which is 75 minutes. Now, if you're thinking, why am I talking about 15 minutes? Why 75 minutes? Why 1 day? Why not hourly? Why not 30? I will tell you all of that right now. So the smallest time frame which I use is the 3-minute time frame, then the 15-minute time frame, then 75-minute time frame, daily time frame, and of course the weekly and the monthly time frame, just to get a perspective. Daily time frame is very obvious that why we use the daily time frame. The daily closing and opening is obviously what determines the what basically shows on the chart the movement of the price action, shows the price action for one single day. Now, why the 75-minute time frame? 75-minute because it is basically the fifth factor of a daily time frame. In one day, there are 375 minutes of trading. I am not talking about the post-market and the pre-market session, excluding those. The market hour from 9:15 all the way to 3:30 lasts 375 minutes, which if you divide by 75 gives you 5 neat candles. Now, the reason why I don't prefer to use the hourly time frame like many people do is because it leaves a residual candle of 15 minutes, which can often be misdirectional and look like a doji on the charts, which is not something I'm comfortable with. I would rather like my data to be very clear. Now, if you are a seasoned trader, you might be aware that there are other things that you need to adjust on the charts. For example, there is, at least on TradingView, which is what I use for my trading, there is a function called adjust for dividends, which means that every time a stock gives dividend, you have the option of adjusting all your time frames to reflect that dividend within the price action or not. The problem with this is that it does change the outlook of the chart, and since chart reading depends upon patterns and depends upon consolidations or breakouts and trend lines and drawings, things do change. So you need to determine whether you are somebody who's comfortable working with dividend adjusted charts or non-dividend adjusted charts. But anyways, I digress. Let's get back. So why 75-minute chart? I've made that very clear because it is 375 divided by 5, which means 5 neat candles. So that basically means that coming from the weekly time frame to the daily time frame, I'm dividing the whole weekly, or rather expanding the weekly chart by a factor of 5 when I come down one step to the daily time frame. When I use the 75-minute time frame, I'm using the same factor of 5 again to further expand the view of my chart into 75-minute candles. The next time frame that I told you about is a 15-minute time frame, which if you are good in math, you already know is again a factor of is the fifth factor of 75, which basically means 75 divided by 5 is 15 minutes. So now I have a 5x zoom view of the time frame of the price action with a 15-minute time frame, and then the 3-minute is again the same. So what this helps me out with is I get a very clear, very synchronized view of the different time frames and the price action. So a lot of times it happens that when I start looking at a chart after a long time or a new chart, I always start with a monthly time frame to get a broad sense of where the particular stock is headed. Now, before I get into more details, let's take a look at the charts, because that will help you give a better perspective. And after that, I have few stocks which have given really good alerts. We will go over them one by one, and we will try to identify good entry points depending on these factors that I'm going to share. Okay, so I can see there is a question from Rahul Singh, and he's asking for a description of how I use VWAP RSI indicator. So Rahul, I do not use VWAP, I use RSI, and if you go and look over my past videos, there are lots of descriptions of how I use this that in details. You can check them out. Unfortunately, today's session is not about RSI, so I will not be getting into a lot of details. I will get into some information about that. Okay, so let's take a look at the chart of LTIM, since that is what is open. And like I was saying, I use these different time frames like monthly, weekly, daily, 75-minute, 15-minute and 3-minute, within which the main decision making time frames for my purpose of trading, which is swing trading with a time frame of 2 weeks to 6 months, the primary time frames are 15 minutes, 75 minutes and daily time frame, right? So let me also show you this. So these are again all the 6 time frames that I use. There was a point of time when I started using 8 time frames, but then that was honestly too much, so I had to reduce it back down to 6 time frames. So as you can see, there are very limited indicators. There's only RSI on all the different time frames. And one thing about RSI that I do want to mention is that I do not use the 14 period RSI. I actually use the 25 period RSI for my daily time frame, 75-minute time frame, 15-minute time frame and 3-minute time frame. Now, why the 25-minute time frame and not the 14 period time frame? Firstly, there is no solid reason out there for 14 period. I did a very detailed analysis and research into why did Andrew Cardwell, when he Willis Wilder, I think. What is the name of RSI's founder? Why am I forgetting this? Willis Wilder. Why did J. Willis Wilder, when he formulated RSI, why did he go with the 14 period? I did not get a concrete answer. So it was just based on trial and error. And lately I had been feeling that the 14 period RSI is not giving me the kind of results that I would want, or rather the kind of results that the market was potential of delivering. So I did a bit of testing and I landed at the time frame of 25 period. Now 25 period also made it made a lot of intuitive sense, and this is why. So on the daily time frame, if you think about it, 20 to 25 period time frame is basically giving you a reflection of 1 month of price activity. So basically the RSI on the daily time frame is capturing the data of at least 1 month every time it gets formulated, which is a good period to look back on. And since 1 month time frame is also the time frame that I am looking at in my process of eclipsing, it is good to have that reflection of a 1 time frame higher than daily time frame. The same applies to the 75-minute time frame. When I use the period of 25 on the 75-minute time frame, I'm basically getting a reflection of the weekly time frame, because do the math. That it's basically 75 into 25, which comes out, which basically covers the entire week's time frame. The 15-minute time frame with the 25 period basically reflects the daily time frame in the RSI, and the 3-minute reflects the 75. Of course, it is not very accurate, but we are not looking for accuracy. We are looking more for intuitive sense here, and 25 period RSI honestly makes intuitive sense. For the 14 period, for the weekly time frame, however, I use the 12 period RSI, and for the monthly time frame, I've left it unchanged, because honestly, I don't look at the RSI so much on the monthly time frame. I rely more on the price direction. Now, I have discussed about how I draw trend lines in past several sessions, and here you can see that I have used the very same methodology of drawing trend lines, which I call cloning. So I basically use the 2 very eminent tops which are formed on the chart of LTIM, and then I clone those trend lines to cover other major price points, first on the daily chart, then on the weekly chart, and then I kept going down the daily and the 75-minute time frame, which basically increases the number of trend lines. But the advantage of this methodology is simply that trend line drawn with the cloning method fulfills the objective of drawing trend lines, that is capturing the trend. I have seen people, and in fact I am guilty of this sin of drawing trend lines by joining very random two price points and thinking that it was valid, but that has given me very disruptive results in my trading, leading to unnecessary losses and quick stop loss triggers. However, this method of cloning trend lines has resulted in identifying very good entry and exit points. Now let's talk about let's further get into the discussion of cloning. Now here in this LTIM time frame, you can see that daily time frame, you can see that I use these green triangles to measure, or rather mark, the horizontal zones on the charts. So on this chart, you can see that I have marked various horizontal zones, for example near 3686, near 4170, and near 4000, around 5000 rupees. So when I draw these zones, these in combination with the trend lines give me a very good idea of where a potential reversal might come. Now, how does the concept of eclipsing come in handy in this? So once I have looked at the daily time on the monthly time frame, it becomes very evident firstly that the chart has the price action of the stock LTIM has fallen down significantly and come close to a very important support trend line. This support trend line is also very important because of all the trend lines that we have drawn. This is basically the lowermost trend line. So there is one way for the stock to go, that is up, and if it does start going up and if it repeats what it has done twice in the past, that is approach this highest trend line, we can see there is a massive upside. Now obviously we are not going to leave the downside open, so on that monthly time frame we can see that the risk that we would have to incur to expose ourselves to this potential upside is very little. So now we go down to the 75-minute time frame and see whether there is an opportunity or not. So as you can see these green dots, I basically started making position in LTIM when the stock came down to the very last trend line, which is this blue one. I'm giving it a little shake for you to be able to see it. But then in my past analysis, I've also seen that these horizontal green zones also play a very important role. A lot of times it so happened with me that only depending on trend line led, and not giving attention to these horizontal zones led to triggering of lots of stop losses. So now in order to accumulate my positions, what I've started to do is I use the trend line to start accumulating positions, but then I also look out for horizontal zones to make sure that I'm not ending up in whiplashes. And here as you can see, the accumulation zone basically lasted for around 5 to 6%, where I made multiple buy entries. All of these green dots that you see are buy entries, and because I'm a technical analyst and because I give services via EXP-Invest to other retail traders who are interested in buying stocks, this white pin here indicates that this is where I told my members who are subscribers to get into the stock of LTIM right at the low. Now, what was another thing that indicated to me that there might be a good trend, or rather a good momentum building up in the stock? Now, if you look at the 75-minute time frame itself, 75-minute chart itself, and if you just look at the price past activity, it's very evident that the stock has been taking strong support at the level of 4,136. Now, I was very clear in my head that if the stock falls below the level of say 4,100, I would be getting out, because the next support level is another 6% lower, which is where I would rather make a fresh entry than let my capital get eroded by 6% more. So this is why basis this particular zone or this consolidation area, I decided that it is a good idea to make position at least for the short term. Now here you can see that within 2 months time frame, the stock was in a position to give some 17 to 18% return, which in my opinion was a very attractive number. So with a target of 5,080, I gave a call at the level of 4,190 to my members. And you can see today that target has almost been achieved. But let's take a look at 15-minute time frame and see whether or not it confirmed our entry level or near the level of 4,190. On this 15-minute time frame, the RSI, which is basically the relative strength index, a leading indicator, gave a very good confirmation. You can see there is a strong positive divergence which developed as soon as the stock touched this green accumulation zone. Now, if you also use TradingView like me, let me remind you that it is very important to keep linking on. By linking, what do I mean? Basically, when you keep your linking on, then all the drawings which you make on the chart will sync across your layout, which means that when you draw these horizontal zones or green zones on the charts, you will be able to see it across your different time frames, which helps a lot in eclipsing. Now, taking a look at the 15-minute chart, of course, in hindsight, it becomes easier to see. But when I took this position, what I had actually done was I had taken a look at how 15-minute time frame behaved when the price had approached this same zone in the past. And I could see that in the past also, there were positive divergences. For example, you can see here there's a positive divergence. This is a positive divergence. So the 15-minute time frame was saying that, boss, it's a good time to make a long position in the stock. So I just waited for the 15-minute time frame to give that confirmation. I waited for the 75-minute time frame to come back down to the level of 30, though there was no positive divergence here. However, it had been established already that the stock has formed a very good bottom near this level of 3700 and then near the level of 4100. So usually in the 75-minute time frame, when there are repeat up legs, you will not see repeat divergences. So that is why it helps looking at a time frame lower, because for a 15-minute time frame, when this massive 15-16% correction has come, it is significant enough such that the 15-minute time frame RSI has approached the level of 30 almost 2 to 3 times within this period of correction. So that is why the starting of this time frame is a very this upside is a very significant event, and it is marked by a positive divergence on the 15-minute time frame. However, if I would have seen only a 15-minute time frame RSI positive divergence but not a confirmation with the level of 30 touchdown on the 75-minute time frame, I might not have gone for a long immediately. I would have waited a bit longer. So why am I talking about this 15-minute or 75-minute 30 level touchdown on RSI in the stock of LTIM? So let's talk about RSI briefly. The relative strength index is a very intelligently formulated indicator. And what do I mean intelligently? So the fact that it's an oscillator and is limited, its movement is limited between the range of 0 to 100, basically makes it very adaptive. Now, different stocks move in different lengths of percentages. They have different sizes when it comes to their swings. What RSI does, the beauty of RSI lies in the fact that it adjusts itself depending on the wavelength. Now, for example, a large cap stock, it may not give a wave of more than 10-15% every time it marks an up leg. It's very rare, right, for a large cap stock. But when we talk about a mid cap or a small cap stock, it can easily give single swings of 40-50-60% also. Not a very big deal for small cap and mid cap stocks. However, if you look at RSI does behave really uniformly across these different market caps and different personality stocks. Across all stocks and sectors, I've seen that the level of 30 plays a very important role, because the level of 30 is where in a bullish trend, the RSI comes down to take support before it turns back up and starts rallying again. Now, how exactly does it behave around 30? vary. For example, in some cases it may pierce the level of 30 slightly, in some cases it may bounce back from the level of 33 itself, in some cases it may just hover a little bit near the level of 30 and then turn up, in some cases it has a tendency to give a very sharp turnaround from the level of 30 during a bull trend. And again, this behavior also changes a lot. So I just want to give you a disclaimer that just because I'm talking about 30 and 70, which are very common indicator, very commonly observed levels on the RSI, it is not easy. It's very important to visually backtest how a stock is behaving around a certain indicator on a certain time frame, and then make your trading decisions. This is also why having a very limited watch list helps, because it helps you develop familiarity with the charts and the indicators and their behaviors in different market conditions. All right, so I have talked about the daily time frame, weekly time frame, 75-minute time frame, and 15-minute time frame with respect to LTIM. I hope the discussions that I have shared so far with this specific stock have made sense to you. If you have any questions, do feel free to ask me. Now I will move on to the alerts which I have, and we will see if we can spot any good opportunity in live market. Before doing that, let me just take a look at the indicators. Let me take a look at the comments. All right, so Ravi ji is asking, what is indicator name of the green trend line? So Ravi ji, first clarification, a trend line is not an indicator, it's a drawing. And by green, if you mean these zones, these are again drawing tools. These are basically triangles which I use on TradingView, and this is basically the drawing, and I like to keep it a little transparent, around 50% transparent with the green color. So it's not an indicator, it's a drawing tool. I'm sure you can see there are bunch of lines, so don't get intimidated. There are actually only 4 to 5 moving average periods that I use, primarily the 20 period, the 50 period, the 100 and the 200 period. If you see very closely, there is also a 5 EMA, and there is a 5 EMA high and a 5 how do I explain this? So this is basically the EMA of the 5 period, but sourcing the low, that's the red line, and the green line is the 5 EMA but sourcing the high instead of the close price. The white line is basically the 5 EMA on the basis of the close. So these are that. Now if you see closely, there are also few more lines which are little bit more transparent. Now these are actually the lines from the daily time frame, the same moving averages but from the daily time frame. I like to get a reflection of them. So basically, like I told you about the concept of eclipsing, right? So what I do in this is, for example, in this chart of LTIM, if I can just show you this, I'm not sure if you're able to see this, but I'll try to explain. So there are the primary exponential moving averages which I just told you about, which is the 5, 20, 50, 100 and 200. Right now, from the daily time frame, I have borrowed few moving averages and made sure that they are reflected on the 75-minute time frame exactly the way they are visible on the daily time frame. So on the daily time frame, I have the same exponential moving averages, which is 200, 100, 50 and 20. Now I have dedicated the same color to be used across all my time frames, right? And in order to reflect the daily time frames 200-day exponential moving average on the 75-minute chart, I use an exponential moving average of 1000 period on the 75-minute time frame, and I give it the same blue color, but I make it thicker and more transparent so that it doesn't interfere with the analysis. But at the same time, I know while looking at the 75-minute time frame that there is the daily there is a 200 EMA of the daily time frame. Now for instance, on this chart you can see that this thick blue transparent line is lying at the level of 4661. When I go back to the daily time frame, I can see that is exactly where the EMA 200 EMA lies. So this actually becomes very useful in identifying major breakouts on the time frame on the charts, and also it becomes very handy in determining my trailing stop losses. But let's now take a look at the comments and see if you have any questions that I can answer for you. So Rahul's question I've already answered. Stock queries I will take at the end of the session. So current view on LTIM, Shashank, is that so right now it is taking some correction here, and I think the stop loss for now has been triggered. However, I have put an alert at 4820, and if the stock goes back above 4820, then I think it will be really good to take a long position here. But for now, the correction that it has given is kind of significant. However, the trend is still very solid. It's very important to take into consideration that LTIM right now is close to a very strong resistance, as we've already discussed. This green zone is acting as a resistance because the price is below it. Once it goes above it, it will become the support zone, but for now it's the resistance zone. So extra caution is required here. So if you currently have a long position too, I would suggest that you use the stop loss of 4750. All right, so Sandeep has a relevant question. He's saying 25 period. He's asking whether 25 period RSI is for every time frame or different. All right, so the 75 period so the 75-minute chart is using the 25 period RSI. The 15-minute is also on the 25 period RSI. The 3-minute is also on the 25 period RSI. The daily time frame, however, on the daily time frame I use 20 period RSI because there are around 22 working days, trading days every month, and every month we have roughly round about 2 days when the market is off. So that is the reason why I have shifted to 20-day RSI on the daily time frame, because my objective was very clear. I basically wanted a reflection of the monthly candle on the daily time frame via the RSI. On the weekly time frame, I'm using a 12 period RSI, and the monthly time frame is not relevant, so I don't see much RSI on the monthly time frame. Okay, all right, so let's move on to the alerts that I have, and let's see if we can find something interesting there. All right, so Rajesh Expo is a stock that I trade quite often, and if you look at this weekly time frame, on the weekly time frame it's very evident that the stock has strong resistance around 997, but what is also evident is the fact that the stock also has strong support near the level of 530 to 540. The stock right now is trading at 556. So that's what we've determined from the weekly time frame. Now let's move down to the daily time frame. Alright, so on the daily time frame, we can see a lot is happening out here. On the daily time frame, the RSI is now taking support at the level of 30, and despite of the fact that there is a lower low on the price, we can see there is RSI positive divergence. Now, because daily time frame is not the primary decision making time frame, we are not going to call this stock a buy just yet. Let's move on to some time frames below. But before that, I want to talk about the previous time this stock approached the level of 530, where we have the green zone, and we can see there also the stock gave a very good support at the level of 30 on the daily time frame. Now let's move to the 75-minute chart. Now before I talk about the activity that's happening right now, I want to look at the last time, which is the beginning of June, when the stock had bottomed out and unleashed a massive rally of 87%, which lasted around 238 days. Now of course it's way more than the time frame that I usually hold my stock for. However, if I were trading the stock here, I would be very happy to make around 24% within, a time frame of 20 days. And would I go in for a position near this level? I most likely would, because you can see that on the 75-minute time frame, the stock gave a very beautiful RSI positive divergence. But there is one problem, that RSI positive divergence we just saw on the 75-minute time frame was very long, and it just took many days to develop. So usually when that happens, stop losses get triggered, and not a very healthy situation to be in. That is why we need to look at, so when a stock is giving a very drawn out kind of a divergence, which can happen very often, it becomes very important to make sure that you are taking your trading decision on the basis of one time frame lower. So that is why we are on the 15-minute time frame to observe the behavior of the price as well as the RSI when it was near the 530 level. So basically, by looking at the price and the indicator behavior historically, we are trying to memorize, or we are trying to familiarize ourselves with what this stock basically behaves like. Because we are short on time, I am only looking at one low here, but usually when I'm identifying a position, or when I'm trying to identify an opportunity, I will look at multiple such lows and try to identify the behavior of the indicators and the price action around these different lows. Basically, because I'm trying to identify a turnaround in the stock, I will go back in time and see how did the stock and its indicators behave during such turnarounds in the past, right? Because I basically want to identify copycat opportunities. Okay, so so here we can see that initially the stock on the 15-minute time frame, there was clear indication of bearishness, because RSI went below 30, and then RSI started taking support at the level of 30, which was a sign of strength. Then RSI gave a massive positive divergence and then showed some sign of RSI range shift, which was our cue that this stock has now become bullish. So what have we learned? We have learned that when the stock basically comes down and it's ready to, ready for us to make position in, it goes above the level of 40 on the 15-minute time frame. What are we seeing right now? That the stock is close to the zone, but it has not really come to the zone yet. And what is the behavior of the RSI? The RSI is still showing signs of weakness on the 15-minute time frame as of mid-April. But right now, if we see, then the stock is still coming below the level of 40, but has started to take support near the level of 30, which is a strong sign. However, is the stock still ready for us to take a long position? At least Rajesh Expo is not, because as I can see on the 75-minute time frame also, the stock is still going or piercing below the level of 30, which is a sign that there might still be some weakness left. However, few days back, because there was a very discernible positive divergence, I did give a long call to my members on the stock of Rajesh Expo right at the bottom, also because the stock was right at the bottom and the risk reward ratio was like very lucrative. Incidentally, the stock ended up achieving the target of 11% in just a matter of 2 days. It was wonderful. And now I'm waiting for the stock to come back down to the level of 530, which is the zone where I think a good opportunity would come up. And just now we've discussed, using the daily, 75 and 15-minute time frame, what is the kind of behavior that we will be looking out for in this particular stock to identify a good entry opportunity. Let's move on to another stock. Let's talk about Cummins India. Alright, so in Cummins, we will not be able to spot any live opportunity. However, we can see that there's been a massive downside of around 5% today. And Cummins India is a stock on which just this morning I warned the members in my Telegram channel to steer clear, because there was a negative divergence building up, and I have already marked it on the chart here. So when this kind of a pattern develops on the RSI, it's usually best to start, I mean, you should always trail your stop losses, but when this kind of pattern develops, it makes sense to close in your stop losses a bit more, tighten them a bit more. ICICI Bank is not going to be attractive now. As we are talking, the market seems to have turned quite bearish. Let's take a look at Renuka and see whether there's an opportunity. Okay, so let's talk about Renuka. So we'll start with a monthly time frame, and what I can see on the monthly time frame is that Renuka is already in a very strong uptrend. Now we are on the weekly time frame, and on the weekly time frame we see there are more trend lines, and we can see that these trend lines are basically indicating that very recently Renuka has given a very strong breakout above the highest trend line. For some reason the volume is not on the weekly time frame, but no problem. Let's take a look at the daily time frame now. Let me just fix something here. I think for some reason my trading view has been malfunctioning a little bit today. Some of the drawing tools are acting a little moody. There you go. Now I can see most of the trend lines that I care about on the chart. Alright, so what we can see on the chart of Renuka on the weekly time frame itself, that there has been a beautiful breakout already above the highest time frame, which is very strong. Now when we take a look at the daily time frame to study this breakout further, in one glance we can identify that this breakout has happened on very, very strong volumes, which basically means that whenever the stock comes back down to any form of support, we have to think about making positions. So as you can see here, I've already identified a support zone, because this is the place where the very last leg of rally, which was around 60%, started from. So this becomes a very good support, and as you can see, there is also this gray line, which is nothing but the 500 period exponential moving average on the daily time frame, and we can see that the stock has taken support there as well. So we have multiple positive signals coming up at the chart already from the daily time frame itself. Now let's take a look at the 75-minute time frame, and here again we see that the 500 EMA, which is basically the 2500 EMA on the 75-minute time frame, but the 500 EMA on the daily time frame, but visible here because of some drawing tools. What we can see here is that there is a very strong uptrend already in place, and the 70, and we just discussed the importance of level of 30 on the RSI on the 75-minute time frame, and because this stock is already in a strong uptrend, it coming down to the level of 30 and taking support the third time is a strong time to get into it. Okay, now let's go one more time frame lower and see whether or not we have a good storytelling there. And on the 15-minute time frame, indeed we see that there is already a RSI positive range shift, very, very visible, and a strong positive divergence, indicating that it is a good time to start accumulating the stock. So we also spoke about accumulation zones or support zones, and that is what is marked here in green, right? So now on the basis of this entire concept of eclipsing, what would be prudent here would be to start accumulating the stock and use this range of around 8 to 9%, right, and hold the stock for the next leg of rally, for which the target would be to begin with at least 25-26%, and I would expect that the rally would last at least within a month or month and a half, at least within 2 months we can expect a 20-25% rally. However, in the stock of Renuka, because it is a very strong trending stock, I would suggest someone to hold this stock for a longer time frame and hope for a new high at least. So that would give us a 50% upside with a target of around 64. Now the stop loss would obviously lie just below this accumulation zone, which would be at the level of 38.35. So at the current market price of 43.3 and a stop loss of around 38, a position with a target of 65, 66 would not be out of limits, right? So let's just see. So we've already had this session going on for 47 minutes now. So I think I have explained pretty much everything that I had to tell you about the concept of eclipsing. For now, if you have any questions for me about stocks, please feel free to drop them in the comments. I will go back to the comments and start answering your queries. So there was one query on idea. Let's see. All right, we had Ramesh Haran who asked about Voda idea. Okay, let's take a look at the stock. Now let's start from the monthly time frame. On the monthly time frame, I don't see anything very promising. The weekly time frame, sure, there is a trend line support, but I would be very skeptical. I am very skeptical. On the daily time frame, there was a positive divergence, but the rally is already come and feeling quite tired. The 75-minute time frame is telling us to stay away from the stock with a negative divergence. So I am expecting, basically, see, Voda idea is in a strong downtrend, and I think this downtrend is going to continue. There is no reason on the charts to really believe that there would be an upside. You might be thinking that, oh, I can see a positive divergence, but honestly, in a downtrend that's that sharp, I wouldn't call this to be a very clean positive divergence, right? Plus, because there are a lot of business model and corporate governance issues around with this stock, some litigations going on, I would be very skeptical of making a long position here. I am guilty of trading this stock, and I've also made money on a lot of trades. I've lost money on a lot of trades, but now, because I am in a process of consolidating my own watch list, I have excluded idea from there because of the issues that I just mentioned. So if you are holding an active position, I will suggest you to please maintain a stop loss of 5% at with 6.7 stop loss, and hope for a target of around 7.65. In my opinion, it would be really difficult for the stock to go above the 200 EMA on the daily time frame, which is what this blue line is indicating here. So this is the short-term target which I would give you, with a stop loss at 6.75. The target level would be 7.7 roughly. All right, so that's Vodafone. Ramesh, if you're still with us, don't forget to give this stream a thumbs up and indicate that whether you like the analysis in the comments, please. All right, so I don't see any more active stock queries right now. Okay, no, there are few more. So we have a query on M&M. All right, Mahindra and Mahindra, let's see. So Mahindra and Mahindra is actually a very good stock for swing trading and long-term investment, of course, and you can see why. So this is the monthly time frame. Now on the monthly time frame, I am not very impressed with the chart, because sure, there is a uptrend, but I can see the volume is not very promising. It's kind of dipping to the lower side. The same theme is also playing out on the daily time frame, where there is upside movement, but the upside movement is experiencing lower and lower volumes. Another observation on the daily time frame is that there are multiple negative divergences which are kind of worrying. And another observation that you should be able to make on the monthly time frame is that Mahindra and Mahindra is a stock which has tendency to give strong rallies but also has tendency to give prolonged consolidations. Right now on the daily time frame, I think the stock is going into a more consolidative kind of mood. So a fresh position in my opinion would not be a very good idea here, right? Unless you're playing it for small gains. For instance, here it gave like a 15% up move in 50 days. It's kind of slow, but okay. So Raghava, I'm assuming that you have a active position in Mahindra and Mahindra. So if you do, I will request you to maintain a trailing stop loss somewhere near the level of, yeah, at the level of 1235. Okay, so your trailing stop loss should be at 1235. And as for the target, let's see, the stock is currently very close to this strong resistance zone. So your first target is 1290, and if the stock sustains above the level of 1290 without triggering the trailing stop loss that I have just mentioned, then we can expect the stock to rally towards this next zone, which is around 1350, which would be in percentage terms around 5 to 6% more. But the risk to reward, let's see, it's around 3.4% risk, and on the upside 6%. So Raghava, fresh entry is definitely not recommended here. There are other opportunities which are way more attractive. If you're interested, you can take a look at the Telegram channel. I have been sharing a few stock opportunities there for you to participate in. All right, let's see. Okay, so with that, we have come to the end of this session. I hope you enjoyed the session on eclipsing, and whatever I tried to explain to you made sense. I hope you will use this 15-minute, 75-minute daily, or whatever time frame you're comfortable in. If you prefer to trade with a shorter time frame, then I would suggest that you look for confirmations in the 3-minute time frame. Say you want to use a 15-minute time frame as a primary time frame for yourself, then do use the 3-minute and the 75-minute time frame, and make sure that they are telling the same story out loud in finer or broader details depending. So with this, I will take your leave. This was the Let's Get Technical series. On Friday, I will see you again sharp at 2:30 with the Market Outlook series, where I discuss with you Nifty Outlook, Bank Nifty Outlook, intersector charts, and I answer your queries about the stocks. So make sure you're back here on Friday sharp at 2:30 p.m. Until then, namaste, and thank you so much for joining today's session.